What I'm going to talk about here in the next 20 minutes or so is really a little bit about OrbiMed, about the performance of the trust, but most importantly, I really want to talk about the investment themes inside healthcare and how can we actually make money over the next year in the sector. And 2020 has been a very turbulent year and very challenging, but at the same time, it has been a special year for the trust. It is actually our 25th anniversary. So the Worldwide Healthcare Trust was started 25 years ago in 1995. And as you can see from the chart, it has been a wonderful ride. I've been there since day one. And we are obviously very proud of the performance track record over this year. Healthcare in general has been a good sector to be invested in. So healthcare in general outperformed the broader market by quite a large extent. But we have been able to even best our current benchmark by a pretty good margin. And so really happy about that. We are as well the #1 performing UK investment trust for these past 25 years. So ever since we started for this period, 25 years, we're the #1 fund. And you saw earlier the chart of the Biotechnology Growth Trust being the #1 fund for the past 10 years. That's our sister fund here inside OrbiMed. It's a focused biotechnology fund. Now, I'm pretty convinced that the future for healthcare innovation is very bright, and I'm confident that healthcare in general will continue to outperform over the next 25 years again. And I'm very confident as well that the recipe for success for the first 25 years is still very much in place here at OrbiMed. Now, just like the Worldwide Healthcare Trust, OrbiMed has been started well over 20 years ago with a single mission: find the very, very best healthcare investment opportunity any place in the world. What's unique about our firm is that we have the ability and the expertise to invest from a small university startup to the very largest mega cap companies like Amgen, Pfizer, and Merck. We invest in any part of the capital structure of these healthcare companies, and we invest in every single healthcare subsector. So this is not just a pharmaceuticals biotech fund. We invest in medtech, diagnostics, tools, services like hospitals, and as well emerging markets in India and in China. Now, the one thing where we set ourselves apart from anyone else in the healthcare space is our truly worldwide approach. We have headquarters here in New York, but we have offices in 11 locations, including San Francisco, Mumbai, Shanghai, and Hong Kong. We always open new offices to get close to markets with key innovation or key growth. Our portfolio management team for the Worldwide Healthcare Trust is run out of our New York headquarters, but we do have some public equity team members in some of our satellite locations. Now, OrbiMed has grown significantly over time. We have now in excess of $13 billion in assets under management. And you see that on the chart here, you have the private equity funds, our venture capital funds at $6.5 billion, other public equity, the biotechnology growth, the growth trust. But you see here as well the Worldwide Healthcare Trust, which is the flagship fund of the OrbiMed family, has $2.5 billion in assets. Now, we do think that the large footprint in healthcare is a huge competitive advantage for us at OrbiMed. But our most important competitive advantage is the size of our investment team. And you see there, we have over 100 investment professionals. Of them, 30 have PhDs or MDs, and we have 15 people who are former CEOs or founders of biotechnology and pharmaceutical companies. And that's an arms race. You know, I always love to compare that to an arms race. And this is an arms race OrbiMed is winning. I think there's no one else out there who has really 100 investment professionals turning over the stones in one single sector like healthcare. You see here myself and Trevor. We are co-portfolio managers on the fund. We share responsibilities with communicating about this fund. So you will see from time to time either me or Trevor in the UK at investor meetings and so forth. But it's really not a two-man team. It's really the whole public equity analyst, and most importantly, the subsector heads for each subsector. This is a best ideas fund. We pick the best ideas from every single subsector. Now, if you look at the performance, we are obviously really happy with our 3, 5, 10 years and annualized rates of returns. We have consistently beaten our benchmark, and this is not an easy benchmark to beat. The MSCI Worldwide Healthcare Index has been one of the better sector benchmarks out there. We had a really terrific start to this fiscal year. So our fiscal year ends March 31st. So we have a really nice rebound here from the lows set in March, and the fund is now up 26% with quite a bit of alpha over the MSCI. The key drivers behind that performance are small, medium cap biotechnology companies and emerging market names. They have been the real key driver here in the market rebound for us. So now coming to the investment themes, and I would love to actually speak a lot more about these areas. I can't cover all the investment themes here, but I will cover the ones where I think will be the drivers for performance in the healthcare sector here in the next 12 months or so. And well, the number one investment theme for both the market in general and our healthcare sector is the further development of the COVID-19 crisis. Now, one thing is crystal clear. COVID-19 is here to stay. All the efforts by governments worldwide have had only modest success with containing the crisis. Some governments did a little bit better. In Europe, they did quite well, Korea, Japan. Here in the United States, we've done a terrible job. But governments by itself, they will not solve the crisis. You can't solve this crisis with lockdown, social distancing, and face masks. You can limit it, but you can't solve it. Conquering COVID-19 will require the R&D success of the biopharmaceutical industry. And the response by the biopharmaceutical industry to this crisis has been really remarkable. And you need actually a three-pronged approach to solving this crisis. Number one, you need good diagnostics. Number two, you need good therapeutic therapies. And number three, the ultimate solution, you need vaccines. Now, we have done great strides on the diagnostic fronts. All of the big players have been really good at coming forward with really fast diagnostic screens. And here in the United States, it's actually really easy to get tested these days. In New York, I've been tested 5 times, both antibody test and the PCR swab test. Really easy. It's almost as easy as walking off the street and getting tested. I know the situation is not quite the same in Europe, but trust me, we're going to get there. Second part where we had some great progress on the therapeutic side. You've probably heard Remdesivir by Gilead, is working. So if you're really sick and in the hospital, this will give you an option. We had as well some really good data by a cheap generic dexamethasone, which is, I think, as well very efficient in late-stage COVID patients. And we're going to hear a lot of news here over the summer months of some really promising therapeutics. One of them, for example, will be a therapeutic antibody by Regeneron. I think this will work, and we will hear news on that front over the coming week. But really the key thing is going to be this crisis is not over until we have an effective vaccine. And I'm really hopeful that we will succeed with that. I think the industry is throwing everything at it. We have several different approaches. This is not just a US effort. Been there great strides in Europe with the AstraZeneca Oxford vaccine, which is one of the leaders. China, we had a lot of vaccine players emerging, and actually a portfolio holding CanSino is the first one with a vaccine on the market. The Chinese military is actually getting vaccinated right now with a vaccine by CanSino. Then we have a number of approaches by Pfizer, by Moderna. So I'm really hopeful that by the end of the year, we have a number of vaccines available. They will not be perfect. They will be similar to a flu vaccine, but they will provide a solution to this crisis. And we will have a large number of options available by the first quarter of next year. So I'm really hopeful that actually my healthcare sector is really delivering and is going to solve this crisis. Now, next thing what we have on the plate is the election, and obviously healthcare is always in the forefront of politics. But here's the really most important thing. There were four scenarios going into this year. The fourth scenario that dropped off the table, and this would have been the worst case scenario for the healthcare sector, where we would have a socialist candidate like Bernie Sanders who wants to advocate Medicare for all. That is off the table. So we are now have three scenarios. The number one scenario, Joe Biden as a president with a split House and Senate. That's the Goldilocks scenario. This would be the best case for healthcare, and healthcare would be really off to the races if that scenario would happen. It's more likely that we're going to get scenario three with a possible Democratic sweep, but I am still comfortable with that scenario. I think the healthcare sector has done really well under the Obamacare and the Obama Joe Biden administration. And I think we would do really well as well here with scenario three. And here is an interesting tidbit. Healthcare, as a result of really that Joe Biden and the Democratic sweep have become the front runner scenario, the gap between the healthcare valuation and the S&P is at historically wide low valuations for healthcare. The only two times where we were at similar relative valuations of healthcare versus the broader market were during the Hillary Clinton healthcare reform 93-94, and in 2010 when we had the advent of Obamacare. And both times were incredible buying opportunities for the healthcare sector. And here we go again, election approaching and healthcare trading at a wide gap to the broader market averages. And I'm confident that this will be actually a good entry point inside the healthcare sector. Now, I can't spend too much time here on the big long-term secular thesis in healthcare, but this is strong as ever. Aging population, incredible innovation, more and more drugs. That's the key driver of the sector. And if it would be without COVID-19 and without the presidential election, this is where I would spend probably 80% of my time, because innovation in the healthcare sector is really firing on all cylinders. Some of the hotbeds we have listed here, like for example, gene therapy, oncology, bispecific antibodies, cancer immunotherapy, targeted therapies. So there's tons of innovation coming out of the biotech sector, but there's as well incredible innovation coming from other sectors, like for example, liquid biopsies in the diagnostic space, which is really the holy grail for cancer diagnosis. Or in the medtech space, we have robotic surgery, continuous glucose monitoring, or TAVR heart valve. So there is innovation across every single subsector inside healthcare. And this page is actually the reason why you want to be invested in a healthcare fund. And this page is as well the reason why I'm so confident that healthcare will continue to outperform the broader market into the future. This is the key secular theme inside the healthcare space, inside the reason for buying healthcare stocks. Quickly here, FDA environment is extremely supportive. We are at record high approval rates. M&A, another very, very important secular theme. There has been a little bit of pause due to COVID in 2020. I do believe there will be a resumption of the M&A here in short time. I think M&A will be focused in the $5 to $10 billion market cap space. So there will be not the large mega mergers. There will be a lot more tuck-in acquisitions of single product biotechnology companies. But here again, after the election, probably we're going to see quite a bit of a step up in M&A. This is actually another very important theme here inside the healthcare space. And I am convinced that Asia and China in particular are on the verge of becoming a major worldwide powerhouse in the biopharmaceutical sector. Investing today in a Chinese biotechnology company, this is the equivalent of investing in an emerging Chinese technology stock 10 to 15 years back. So just think about it. Would you like to invest it in Tencent, Alibaba, Baidu 10 to 15 years back? That opportunity presents itself right now in the Chinese biotechnology company. And I mentioned it already, the current COVID-19 crisis has really shown how far Chinese biotech has come. China is now leading actually the worldwide development race for a vaccine. They are not just simply copycats. They are leading actually on the technology front. Now, two ways how we play this theme is one, invest in the really blue chip leaders there, like a Jiangsu Hongwei, who is probably the Pfizer equivalent of China. And then the second strategy is to invest in like IPOs, pre-IPOs companies, and cornerstone investments in China. And one of our biggest gainers actually over the past years has been this company CanSino with the COVID-19 vaccine that went public last year around 22 Hong Kong dollars, and it's at 10x actually since then. So we have been actually heavily selling that stock because it has been rising so much. But this has been a huge theme for the fund. We had $250 million in gains over the past 2 years, or 13 points of performance. So very, very meaningful, our contributions from that area. And just quickly here on the positioning of the fund, you see here a contrast between June 30, 2019 and June 30, 2020. And look at the gearing here at 108 a year ago and now 95. Typically, we are geared 110 to 120%. It's very, very unusual to sit here at 95, so not fully geared here inside the fund. We have been selling a lot of our winners here during this year and the run up into here, especially in the second quarter. We have been taking a lot of profits in some COVID-19 names. This is not the time right now to invest into the names which have spiked due to the COVID-19 crisis. This is the time actually to take profits. So we have been selling our Gilead holdings, Regeneron, Chugai, CanSino. We still hold some shares, but after 10x return, you have to trim. So we have been actually taking advantage of some of the market strength to trim back. So what's our playbook here for the remainder of the year? I'm really hopeful actually that we maybe get a buying opportunity over the summer months or into the fall. I really want to fully lever up as well again. I think closer to the election, this is the time when I want to fully lever up as well. So we have a lot of dry powder, and we can take advantage of any volatility in the market. And look, with our performance, we have a bit of a cushion as well. Another important thing is, I mentioned it already, we will trim any exposure driven by to COVID-19 stocks. We'll be very, very active in emerging markets and crossover investment. This is a strategy which will continue to work. And we will continue to focus on the most innovative and fastest growing companies inside our sector. And last but not least, I want to reiterate again, valuations are low in healthcare. You know, these are on a historical context, low valuations. These are low valuations vis-a-vis the broader market averages. So I feel very, very confident with the how the year has started, and I feel very confident over the coming 12 months.